Hello friends and welcome to BISP Solution. My name is Ankita and today we will continue with the custom financial planning application. In it, we are going to cover three topics today, which are said sale drivers assumptions, then capital expenditure assumptions, and salary and headcount planning. So first we will see sales driver assumptions. So for that, we need to first understand what sales drivers is. Sales drivers are factors that influence the probability of deal closure, deal cycle time, deal profit margin, and the post sale risk of failure. We should systematically identify, analyze, and relentlessly exploit top sales drivers and continuously update the list of top drivers. They may change based on the prospects, the product, the market segment, and even vary based on each sales opportunity. Okay, so now we will move to the application and we have a small example of the sale drivers assumptions with us. So I will take you to the dimension using navigator. Here we will go to the revenue planning. In revenue planning, I will click on the revenue drivers. So here we have predefined revenue drivers in which we have the drivers as the volume, average selling price, the discount percent, the discount that is given to the vendors, as mentioned over here. Then the return percent is the returns, is basically the sales returns. Okay. Then here we have the support percentage. So support percentage are the utility expenses that basically incur while by selling the goods or manufacturing the goods. So these type of utilities expenses are considered over here. And then we have the bad debt. Okay, so when we do not receive any payment from, so this bad debt is the probability that we are expecting that the amount of the amount from the debtors which we won't be receiving. So here this is our bad debt percent. So these are basically the drivers. So now we will go to the navigator and from there I will select the forms over here. So we are going to create a sales driver assumption form in it. So for that, I will go to the drivers and then I will mention the name of the form as sales drivers assumption form. Okay, now I will click on next in the form. Now here I will drag the account in the rows from point of view. Then we will be having year and year in the column. Then we will have period also in the column. Then we will be having the product with us. So we will take this in the page. Similar with the entity and also with the department. So in the version, now I'm going to select here the working version. And here we know that the HSP view is base dimension, which is which is default in all the forms. Now we will go to scenario. Here I'm going to select the scenario as plan. After that, we will be selecting the product here. And then we are going to select here the total product. Then we will be selecting I descendants of total product here. And here I will be selecting the total department and its descendants. Then for entity, we will be selecting the I descendants of Skansa entity. Then for account, no, first we will do the year one, okay? So here we are going to select year as FY23, or we can even select more than 1 years as well. But here I want to select only for select FY23 year. Now for the period, I want the level 0 descendants of Q1 only. For account, we will be selecting in the finance account. Here we will select the revenue drivers. So we will go to predefined drivers, and from here we will be selecting volume, average selling price, discount percent, return percent, support, and bad debt percent. Okay. Now I want to add one more row in it. Sorry, I want to add I will add a row over here. I don't want these members in this row, so I will remove it. And then here I want the member material sales revenue, which is 411100. So here first I will be selecting the alias name as I wanted. Then I'm selecting alias name and dimension properties for department, product, and entity as well, so that the name will be visible to us. Now I want to add view more rows. So here I will be adding the member named A3825. A3825. And I will remove this 4110 member. Then we will be adding here member 4111, 411, 200, and 411, 300. Then here I want to add a member name A3820. I will search this in the box, and then I will select the member here. I also want to add one more member into it. Another member is 82615. Then lastly, we will have one more member over here. And the member name is 411400. Okay. I will add this member. Now we are done with it. Now I will save the form and then preview it. Okay, so here we can see that we have all the members in it. After that, I will close it. Maybe I haven't saved that. Let me check first whether I have saved this form. Sure, it's done. Now I will then go to the data sheet. Here I will click on data in the navigator, and then in data I will be going to the driver, and in driver I will go to sales driver assumption form. Okay, so here we have the data for 3 months only. Right, we can add the value in it. Here we are adding a rule into the form, which is revenue planning. And then I will save the changes. Then I will again go to the layout. Okay. I will go to the sales driver assumption form. So what I will do is let me delete the member from here. Okay, now I will save the changes that I have made into it. Okay, so here what we are doing is we are going to calculate the net material sales revenue. So how we will be doing that? We will be multiplying first volume with the average selling price here. So with that, we will be getting the material sales revenue over here. Okay, I'll show you first of all. For that, I need to run the rule. This is revenue calculation rule. Okay, so here we got the data by using this rule. So we have already created the action menu member, and we have attached this with the form as we have done right now. If you want, I will show you the business rule that is written to calculate the sales driver assumption. Okay. So let me explain you this in detail. For that, I'm going to open this in the smart view so that I can explain you in the detailed form what exactly is happening and how we are calculating the sales, revenues with the help of the sales drivers in it. Okay, so here what we are exactly doing is, so here we are calculating the material sales revenue with the help of the volume and average selling price. Okay, so this helps us in calculating the material sales revenue. As you can see that 1000 is multiplied with 500. So we are getting the value here as 5 lakh revenue. So 1000 was the volume, was the quantity of the material. And then we have the average selling price with us. So we got the revenue. Then we have the discount percent over here, which is 10%. So the discount is given to the vendors who are uh, purchasing the goods from us. Okay, so we are providing them discount if they are making cash payment, or there are many ways of it. So here we are calculating discount, which is being calculated on material sales revenue 4000 41100 member, and this will be multiplied with the discount percent. So I'll show you what exactly we are doing here is 41100 member will be multiplied with the discount percent. Then we will be calculating sales return, which is being calculated on the value that is being sold. So here, this will also be calculated on 41100 member, which is material sales revenue, and this will be multiplied with the return percent. So here the return percent we are expecting is a 5%, okay, in January month. So I will be mentioning it here, return percent. So this will give us the value of sales return. So on that basis, we will be calculating the gross material sales revenue over here. So how we are getting that? We are subtracting discount earned and sales return with material sales revenue. Okay, so how we are doing that? 41110 is subtracted with 83825, which is discount earned, plus sales return, which is 411200. Okay, so we are getting the gross sales material, gross material sales value over here. Then we have the bad debt expenses. So the payment which we haven't received, which are considered as bad debt in the accounting terms, is being calculated here on the material, on the gross material sales revenue. Okay, so how we are getting that? Let me show you the calculation first. So 4,25,000 will be multiplied with the bad debt percent over here. So we will get the value as 8,500 as bad debt expense in it. Okay, so here what how we are getting expense is the member number 411,300 will be multiplied with 83, sorry, not 83, it is bad debt percent. Bad debt percent. Okay, now the utilities we are getting here is basically the support percent is being utility is being calculated on the basis of the support percent, as I have already explained you before that the support percentage gives us the expenditures which we incur for the purpose of selling the finished goods and getting the revenue. So there are many support expenses for like utilities expenses, in which we include the electricity expenses and many more. So here we will be getting utility expenses by multiplying 411,300 multiplied with support percent. And finally, we are getting the net material sales value by subtracting bad debt expenses and utilities expenses with the gross material sales revenue. So this is what the final value we are getting over here. So here 83820 and 82615 is subtracted from the gross material sales revenue to get the net material sales revenue. So we can say that it is a profit, overall profit that we are getting by selling the goods, finished goods we have with us. Okay, so this is how we calculate the revenue with the help of the drivers. Okay, so I'll show you the rule that we have written. So this is the rule that we have given for calculation of the revenue with the help of the drivers here. So as I explained you before, average selling price is being multiplied with the volume, as we can see in the slide. Okay, and then the sales revenue is being multiplied with the discount percent to get the discount earned, then the discount paid, then the returns is being calculated. So this is exactly the calculation which I had shown you is written over here. Okay, so this was all about the sales drivers assumptions. Now we will move forward to the next topic for the day, which is capital expenditure. Okay, so first, what capital expenditure is? The capital expenditures are funds used by a company to acquire, upgrade, and maintain physical assets such as property, plant, building, technology, or equipment. It is basically used to undertake new projects or investment by a company. This type of financial outlay is made by companies to increase the scope of their operations or add some future economic benefits to the operation. So we can say that the capital expenditures are payments made for goods or services that are recorded or capitalized on the company's balance sheet instead of expensed on the income statement. If an item has a useful life of less than 1 year, it must be expensed in the income statement rather than capitalizing it. Okay, so we can say that the capital expenditures are the expenditures which increases the life of the asset for more than a period of 1 year. So if an asset is having the life of more than 1 year of time, 1 year, more than 1 year, so it will be considered as capital assets. So some of the examples of capital expenditure include the purchase of land, vehicle, buildings, or heavy machineries. So this is what about the capital expenditure. Now we will see how we calculate the depreciation in the capital expenditure in the capital assets. Okay, so for that I will take you to the requirement sheet over here. Okay, so in the requirement sheet we can see that the asset was purchased in the month of January in financial year FY23. So the machine so from then on we are calculating the depreciation on that asset. So here the depreciation is calculated on a straight line method basis, and the asset life is for 5 years. Okay, so here we can see that we are calculating the depreciation on a monthly basis. So when we consider it in months, so we will get the value here as 8,333, sorry. So how we are getting that is 5 lakh will be divided by 60 month. As I told you, the life of the asset is 5 years, and here we are planning on monthly basis. So we will multiply it with the 12 months. So we will get 60 months. So we are getting the exact value here as 8,333. So this is what the our accumulated depreciation is. So as we can see that accumulated depreciation is the depreciation is being calculated on monthly basis and it is being keep on accumulating. So for the period, so for the period February, we can see that the accumulated depreciation means the previous depreciation will also be added into the current period here. So current period here we can see that the January month will be added with the current depreciation. So here we will get one 667. Okay, so here we can round it off. So this is how we are exactly getting the value of depreciation, and in the final here we can see that for the year total the accumulated depreciation will be 1 lakh for plant and machinery. So this is how we have calculated the depreciation for all the years. Okay, so now we will again go to the instance, and there I will take you to the calculation manager where we will see where we will learn to write the business rule over here for depreciation calculation in it. So here I'm selecting plan 1 In plan 1, I will right click on the rule and then click on new, and then I will mention here as depreciation calculation test, where the application type is EPM Cloud and the application name is USTFS in which we are working, and here the cube is plan 1. So here we are in the designer mode. I want to write the rule in the edit script mode. So here we are getting the default member here, which is fixed as base data. Okay. Now here I'm going to use an nested fix. Here I want to fix the scenario. So here I have already created a user variable. On the plan member variable here, runtime prompt. So here I will be selecting it directly. Okay. After that, we are going to fix the years. So here I'm using the relative function in which we need to mention the dimension name. So here we are selecting the dimension as years and it's 0 level members. So here we need to give the level members as well. So here we have given 0. Then we want to fix the version over here. So we already have user variable for that. Runtime prompt variable. So the runtime prompt variable for version is named as var underscore version. So I will then click on OK. After that, I'm going to use @level members function here. It is somewhat similar to the relative function. And we will fix the product dimension and the 0 level members in it. Then lastly, we will have relative entity is named as Sanskar. Let me see the spelling. I will directly copy the name of the entity from here itself. So it will become easy and the possibility of error will be very less. Okay, so after mentioning the name, I will then click on I will then select the 0 level member. Okay, so here we also have where we will, I forgot to fix here the department as well. So here I'm using @I descendants for the department here. So here I am considering the member as total underscore department. Okay, now I will mention here and fix. Okay, so we are done with the, now we are going to write the body of the rule here. So yeah, by writing the rule, we need to take care of everything. So here we have The member is, I will go to the accounts and then see the member. So for that, I will go to the balance sheet planning, then predefined balance sheet accounts. In it, I will go to the assets, then to the fixed assets. Okay, so here we have the member name 717110, which is plant and machinery. And here we see the member in the downwards. The accumulated depreciation for machinery and equipment is also mentioned here. Okay, so 17910 is the member. So what we will do is 17910 is our target. Okay, and here we are going to use at the rate SLN function to calculate the depreciation. So here, first of all, I'll show you how it works. Then it will be easy for you to understand. So at the rate SLN function calculation, SLN functions for S-base calculates the periodic amount that an asset in the current period may be depreciated across a range of period. So the depreciation method used in straight line depreciation is cost minus salvage value will be divided by the life of the asset. So here the syntax is being mentioned as at the rate SLN cost member, salvage member construction, then life member construction, then we have the exchange list. So cost member here means the single member specifications representing an input asset for the current period. Then salvage member here means the single member specifications, variable name, or numeric expression providing a constant numeric value. This value represents the value of the asset in the current period at the end of the useful life of the asset. Then we have life member construct single member specifications, variable name, or numeric expression representing the useful life of the asset. Then lastly, we have exchange. This is an optional parameter specifying the range over which the function accepts input and return depreciation value. So I'll show you how it is being taking place. So here here we have the example. So SLN depreciation is equals to at the rate SLN. Then we have to mention the name of the asset for which we are calculating, for which we want to calculate the depreciation. Then the residual value, it will be mentioned over here. Then the life of the asset is being given. And then here the X-range, the range of the period from which you want to, from which period to which period you want to calculate the depreciation. I'll show you what X-range function is while writing the rule as well. Okay, so this was all about the SLN function. So here we are using at the rate SLN, and then I will mention the name of the member, which is an asset. So here the asset name is 17110, which is plant and machinery here. Then we are giving the salvage value as 1000, or we can say that the residual value of the asset, which is being expected. Okay, we'll do this for the next period. So here I'm considering it as 0. The salvage value will be 0 and the life of the asset is 60. So 60 is equals to the months. Okay, as we are planning, we are doing monthly planning here. So we are considering it here as 60 month. Then we will be mentioning the range. So here I'm directly writing January to December. Okay. Then here the next calculation, the accumulated depreciation for the next member is a 17920. So accumulated depreciation for non-core equipment is being calculated in it. So here again, I'm going to write the at the rate SLN 17120 is the asset number. Then here we have the salvage value as 1000. The period of the life of the asset is 36 months, and the asset depreciation will be calculated from Jan to December. Then we have 17930 member. So 17930 is accumulated depreciation for plant equipment. Okay. So the plant equipment here is, so here we are using SLN. Then we are mentioning the member name, that is plant equipment. Then 0 is the salvage value. Then the period of the life of the asset is 60 months. Then here we are using FY23 in intersection with March is to December. So why we are doing is because the asset is being purchased in the month of March in the financial year FY23. So we will be calculating depreciation then on. Okay, so that is why we have mentioned FY23 in intersection with March in this case. Then we will be having the other member named 17940 at the rate SLN 17140 is the asset ID. Then 5000 is the residual value of the asset, and the life of the asset is 36 months. Here we are going to use the X range function. So this will be calculated from Feb in intersection with FY23 and comma December in intersection with FY26. Okay. After that, writing after each and every rule, we need to put a semicolon. Okay. Now I will first validate and see whether the rule is correct or not. Okay, so it means our rule is correct till now. So let me take you to the exchange function. So at the rate exchange calculation function for SBase returns the range of member between and inclusive of two specified single or cross-dimensional member at the same level. For example, when you work with the time and scenario dimension, you can use at the rate X range to return a member set combination of time and scenario instead of creating a dimension that combines the two, which creates many more individual members than necessary. So X range function is a member set function. Member set function returns a list of members. So exchange function can appear anywhere in the formula where a range can normally appear. So the syntax is member name 1, comma member name 2. So member name 1 can be any valid member name, member combination or functions that returns a single member. Member name 2 is any valid member name, member combination of functions that return a single member if member name 1 is cross-dimensional member, such as actual in intersection with Jan. Okay, then member 2 must be also, and the dimension order must match the order used in the member name 1, as we did in this rule here. Here we can see that we have February in intersection with February FY23 as the member 1. So member 2 should also be in this specific format as well. So here we have taken December as the month in intersection with FY26. Okay, so this is how exchange function works. So now we will write the rule, continue writing the rule. So here we will have next member with us. So here it is 17950, which will be equal to @SLN 17150, comma 0, comma 36 is the life of the asset. Then it is from Jan to December. Similarly, we need to take care of indentation while writing the rule. So here for asset number 17960, we have the residual value as 2000. Then the life of the asset is 120 months, which is equal to 10 years. And then the period here will be from FY23 in intersection with June till December. Okay. So let me mention the year name in double quote here. Then we have the asset number 17 17170. Okay. So here it is for 36 months. Here we have the last asset, which is 17180, and the residual value is similar 0, and the period, the life of the asset is 36 months, and the range is from January to December. Now I will validate the data. Okay. After validating it, we will deploy the rule. And then we'll go to the input sheet. Here we can see that we already have given the value of the asset that is being purchased. We need to calculate the depreciation. Now I'm going to launch the rule from here. Okay, now I will refresh the sheet over here. Uh, okay, there is a problem in the SmartView connection. So the data is being deleted. Let me copy the asset value. Okay, now we can even run the rule from here by clicking on this calculate, then to the business rule. Here I will be calculating the depreciation calculation test rule here. So business is being is run successfully. Now I will refresh the sheet. So here we can see that we are getting the data. Okay. Now we will go to the variant sheet and view that there is no variance. That means our data is validated. Okay, so this was the rule all about the depreciation calculation. Now we will move to so this was the sample rule that we have written. Now we will move forward to our third topic, that is salary and headcount planning rule. Okay, so we will see how do we write that. Before that, I will take you to the requirement sheet. So what exactly we are doing here is we are planning the salary on the basis of the headcount. So here we can see that we have a headcount of 10 number, and the basic salary here is 10,000. So the workers' compensation we have assumed here as 10%. Then we have the HR benefit as 15%. And lastly, we have the union benefit percentage as 5%. These are the all the assumptions which is being made for planning the head count and the salary. Okay. So on that basis, we will be getting the 61105 labor operating expense here. So how we are getting that is we are getting this number by multiplying head count and the basic salary. Okay. Then we are getting the workers' compensation here, which we will be getting by multiplying the labor expense to that of the worker compensation percent. Similarly, in case of the union benefit, we will getting the union benefit with the help of the salaries, which will be multiplied with the HR benefit over here. So we are exactly getting the 15,000. So lastly, payroll tax is being calculated. So payroll tax is being calculated on the total compensation that we are receiving at the rate of 10% here. So we cannot find the member here payroll taxes because runtime prompt variable is being created for that. So I'll show you that how we are doing it. Okay, so here we will be considering it with 10%. Worker compensation is 10,000. I've left something. Yeah, I didn't consider union benefit while calculating it. So the union benefit, wait, I have made some error in it. Okay. So here we have the rule with us. Okay. So here we are calculating union benefit, which is at the rate of 5%. Okay. So here I made the error. Okay. Yeah, got it. So here our basic salary will be multiplied with the HR benefit. Sorry. Here we are getting the union benefit. So this will be multiplied with the 5%. Then finally, we will be having our HR benefit, which is at the rate of 15%, will be multiplied with the basic salary. So now we will calculate the tax, which will be calculated on the salary which we are earning at the rate of 10%. So here we will be getting 13,000. Okay. So this is how basically we are calculating our payroll expenses, and we are planning on it. So now we will go to the rule, and here in the system view, I will then right click on the rule and then click on new. So here I will write the rule as test salary head count. Okay, after that I will click on OK. And then we are going to write the rule in the edit script mode. So here we have the base data as the fixed member by the default as a default fixed member. Now we are going to fix the other members in the rule. So here we are first considering at the rate I descendants of year total. Then here we are using at the rate level members. And I will mention the name of the dimension here as product 100 zero level members. Then here I will be selecting the variable for scenario, which is in the application scope. After that, I will select the year range. So here I will be directly mentioning it as FY23 to FY26. Okay, so now I'm going to use the nested fix function over here. I will use one more fix function. And here I will mention the at the rate I descendants of the total underscore department comma. Here we will be using at the rate relative function here. And here I will be selecting the name of the entity. And then comma and the zero level member. Okay. And then I will be using here end fix. Okay, now here we will be calculating it for the member 61105. This is the basic pay. So this will be calculated with the help of the driver's head count. And this will be multiplied with the basic salary. So I will then move to the instance again, and then from there, I will click on financial accounts and then expense planning. So here we have the salary expense planning drivers. So here we have the basic salary. I will directly select the member over here. Then the secondly, we will be calculating workers' compensation. So for that, the target will be our member name 61121, which will be equal to 61105 basic salary multiplied with workers' compensation percent. Then we will be calculating the union benefit. So the target member is 61123. This will be multiplied with 61105. Okay, so This was about the union benefit. Then we will be calculating HR benefit. So the member number is 61124 and the source will be 61105, which is the basic salary, will be multiplied with after every rule, we need to put semicolon, otherwise the formula will not be completed and it will get an error in it. Okay, so the last member is 61122, which is our payroll tax. So this will be calculated with the help of adding the basic salary, then workers' compensation, 61121, then 61123, 61124. And this whole will be multiplied with the variable runtime prompt variable that we have created here. So we will add it with the help of the variable here. So this was created in the application named BAR underscore payroll tax rate. So the default value here for this percentage is 10. Okay, so this was, after that I will put semicolon and now I will validate the rule. Our rule is validated without any error. Now I will deploy it. And lastly, I will launch my rule. Okay, now so this was all about the requirement. Let me connect the sheet with a smart view first. Okay. So we got the member here as we have already launched the rule. Now we will go to the variance sheet. We can see that there is no variance in the rule. Hence, the data is validated. So this is how basically it works. Okay. So for any more queries, please feel free to ask. Thank you.